Hello traders. In this video I will go through the Friday's day trading opportunities, so for Friday December the 14th, and then I will go to the higher time frames on DAX and show you some important fibs, make some comparisons with the swings from before, and let's see what the targets or scenarios can be for the next period. So as usual, this in front of us is the 30-minute chart with adjusted zones posted before the open, and that was posted before the Friday's open, and this was morning notes in which I said that price is in the pre-market testing this zone 815-830 zone, and that the reaction on this zone could help us develop intraday bias. And unless we see a very strong momentum to the downside, that buyers likely to step in at this first zone, 740 to 760. As you know, we were using this zone around 750 level many times before. It was like an axis zone providing both supports and resistance many times. And also a very important zone fib wise also. If we look at this upswing, Monday lows from to this high here that we had on Thursday, basically high on Thursday was 1 or 2 points below this main resistance zone, which is around 11k level. And if you draw a fib on that move, you will see that 61.8 fib is right here at 740 at the bottom of this 740-760 zone, which was very important for us before. As you can see, many touches. This here was a resistance, this was support, this was a resistance, and so on. So what was the opportunities on Friday? Well, in pre-market, and pre-market now is, as I'm sure you noticed that from a Monday pre-market is not from 8 to 9, but it is extended from 1:15 a.m. to 9 a.m. And now this vertical line on my chart is going to represent the open, the 9 a.m. And in pre-market we had this move down. This was the first candle of the Friday. This was the start of the pre-market in Friday, and immediately in Asian session they dropped the DAX on this first 815-830 zone. And note that if you are trading DAX, and if you were shorting on Thursday this zone, I was I had short also here, and we first get this good move to the first zone to like 900 level, and then it was going again up, and for many hours staying here above 900, and then we had this kind of move, 100-point move in Asian session. And that could happen, you know. And if you have the opportunity, note that these zones with thicker lines, these zones can be good and can be used for swing trades also. But note that you got to have context and trend in your favor. And what is the trend on DAX? It is a downtrend, obviously. And if you have an opportunity to short near or at a larger time frame zone, which is represented by these thicker lines here, then you could expect even a swing trade from it. But for swing trade, that really means that you have to take overnight risk and hold, and that was the only way to get this kind of trade, 150-point move. I'm sorry, 250-point move from almost 11k to 750. It is 250 points. But you have to be able, to take that risk, and it is also good option if you can trade multiple lots, micro lots, mini lots, whatever, that you leave a runner, that you close something, move your stop closer or to break even, and then take some time for your runner to see if you can get a bigger target. Now let's go to the day trading opportunities. So this was pre-market. This from here, let's draw another line here. So this is here is 115, and now pre-market starts. Asians are dropping DAX to this zone, and it is just here, as you can see, balancing on the zone with very weak bounces. And this is something that you really don't want to see if you're a buyer. If you want to go long from here, this is not a good price action. It is holding, and then close to the open, it is going down through the zone, and this was the pre-market low, as you can see. This was the pre-market high. And now we have this kind of activity which is basically hugging this zone, and it is not a good thing to see if you want to fade this, because DAX is obviously going down. It is in the downtrend, it is in the bear market, and you have to be very careful with your long and go long only on the best of the best possible locations. And this isn't the best of the best possible locations, and then price is hugging it, and at the end you could see that on a 1 minute chart. What were they doing? They were just going balance, hugging this bottom line of the zone, and at the end they broke. And this here was an entry for a short trade. That was the trade that I have shown on Twitter. So this isn't really a trade so much based on the zone itself, or it's not a fade of the zone trade or pullback to the zone kind of trade. It is the trade that market is unable to hold the zone, unable to hold pre-market low. It is hugging it, and essentially you are selling a breakdown. That is it, essentially. And target is of course to close near this zone. It was a very quick trade for 40 points. And then price is at your, for today, best of the best location if you want to go long. Now remember, at the beginning of the video that I have shown you this fib from here to here, this is a 61.8 fib retracement. So you have a confluence with fib retracement and with the zone, and that zone provided us many trades, longs or shorts. So you can have your order here, or after this move get in for long, and also to close your trade here on the next zone, or close partially and wait with the other part for the bigger target. And now this zone here, let's go to the smaller time frames. By this time, what did the market show us? By this time, this is 10:30. It showed a drop in the pre-market, then it was showing us weakness, but there stopped here, and this was the bounce. So market really isn't that weak, because weaker market would just drop and go. This here was not only zone and 61.8 fib retracement, it was also a kind of gap and go into support kind of setup that we also had these few months, quite a few of them, especially gap and go into support, gap and go into resistance for short, and now this was gap and go into good support for today, good zone, 61.8 fib and all of that. So for if you are entering at the middle of the zone from 750 like to 800, 810, it is 50-60 points. Very quick 50-60 points. And you're taking it. This was the gap from December the 11th. It was filled on the way down. No reaction at all on it. And now we have testing of this zone that was broken in pre-market and immediately after the open, and now it can act as a resistance, and you also can short here. And let's see what you have. Again, you can go with fib to see can you get some smaller target, and as you can see, it is a 50 halfback, 50% fib, testing again this gap, testing here this area. So this is some kind of intraday level here, and that is your closing. So this trade is nothing much, 30 points at best with really extraordinary good entry and exit to exit here, or it could finish as a break even, because if you are shorting here at the middle and this zone already was broken, now it is tested, you shouldn't really allow this trade to come a loser. You observe this price action. It was testing it, dropping down. Now they are building higher lows and testing. This kind of price action is something that is indicative that the market wants to break above. Now it is again above pre-market low and going above the zone, and you could buy this pullback to the zone also, because now it's the time for us to think about the range. Could this be low of the day? And if it is the low of the day, where could this range could established? If it is to the upside, and here a market traveled less than 100 points to the upside, that means that if it's going to continue to the upside, you still have like 50 to 100 point space for this run to continue, and then you could conclude that this can go to the next zone. So here breakout, coming back to the zone, this is another long opportunity for you with exiting near this zone, near the zone, because in morning notes I also said about this zone. First resistance where sellers can be active on the first test is this 885 to 900. Above that is cash close. It was not tested. This is going to be a gap on the chart on Monday, and here is our short opportunity. Personally, I had shorting order, resting order that was waiting here few points below the zone. I got filled, and then it basically balanced here and chopping for quite some time. It wasn't really trade of the week, but it was a good trade after all. So from here, from the zone, from later, when you see this is a false break of the zone, so you could enter here, you could enter here, you could enter on this pullback at any time. Market provides you plenty of time for chopping here and testing this zone, and also you can draw another fib from this highs on Thursday. So and this was a move already, so you could draw a fib from here and observe that this is 61.8 now of this fib. So this is how to use Fibonacci retracement tool in confluence with these zones. And again, close your order near this zone, because now the time is already RTH session is over, past 5:30 p.m. This is the time where DAX trades, kind of trades in you know, confluence with the S&P, but not moving as much. It's usually just will go same direction, but it will not make as much as the S&P, and I will show you now that. So to recap this, we have this one opportunity with closing right here for 40 points. This was for like 50-60 points long. This was very small short opportunity, maybe even a break even. This was here another 50 pointer, and this here was another like 40 pointer or so. So plenty of opportunities, all between the zones, which was predetermined, and with fib usage. And now let's see, from 5:30, if you can observe this, the DAX really didn't made anything here. It was just chopping in some kind of 30-point range, while the S&P at that same time, if you observed this is like 5:30 is here, and it made a move from 26.22 to the 25.95. So it made 27 points. It made a 1% move, while DAX made a 30-point move. So 30 points, you know, for DAX to make a 1% move, it would mean 110 points, not 30 points. So if nothing happens on a Saturday and Sunday, like positive news or whatever, there could be a gap down on Monday, because DAX didn't make anything. It didn't make a catch-up move to the S&P. Now let's go to the higher time frames and observe this. Here is this 740 to 760 zone, and this is a fib retracement of this 61.8, and you could think that this here could be maybe now a higher low regarding to this, and start from something to the upside. But DAX is in the downtrend. DAX is in the bear market. We already had moves like this. Look at this, moves from lows from October 24th. And when you draw fib to this swing, here it was also 61.8% fib retracement, but after that, what do we had? We had just lower and lower and lower. So this here really doesn't mean much if it's going to be violated. Even on Monday we could have a drop below this 740 level and going lower. Now let's go to the higher time frames. Let's go to the daily chart and observe this kind of movement. So from here, from September highs, what did we had? We had a big drop and 38.2 fib retracement and continuation. Now similarity, big drop, again 38.2. So this here could be another drop with estimated target of this drop. If it's going to be like this here, it could go to the like 10,200, which then would be in alignment with the bottom of this famous range here. So this was rejected once from this, but another attack could lead to the low end of this range, all the way to the 10,200. And let's go briefly, just briefly, through the US markets. This is S&P daily, also fib 38.2 retracement, possible lower low, possible targets are here, double bottom from February 6th and 9th. You could also observe this channel Here was a false breakdown, a spring, but it produced only 48.2, as you can see now, fib retracement. You can also observe this as some kind of range, and that range could be like this. And if ranges are broken, you should really do like this and observe where the possible extension of that range could be. Now you could also draw fibs and so on. For that I would recommend you to watch my weekly video from the previous weekend. Nasdaq, also series of lower highs in the channel. No, it is not left this channel yet. And the weakest of the all, it is the Russell. It already tagged lows from February now on Friday and could go lower, and this was the possible bearish scenario to go here to the 1300 level, and I just upgraded that scenario to the likely scenario because this is really the weakest index of all in the US. So that was it. Here, this chopping on Friday, I think we could get gap down on a Monday because it really didn't follow. And I knew a trader from Amsterdam, he would often say that the DAX has no mind of its own, it just waits to see what the USA will do. And someday that is true, you know. It was like on Thursday when it hung below this 11k and just waited and waited and waited to see what would US do, and his resistance, DAX resistance, was much more important for it than a resistance on the on the S&P. And also ECB meeting was more important for DAX, but it still waited. So when the RTH session is over on DAX, then basically it's better to, you know, in the afternoon past 5:30 and past 6 p.m. to trade US market than DAX. And DAX for the RTH session of its own RTH session. So that is all for this video. I wish you a pleasant weekend and good trading.